You are convinced that President Putin is going to invade Ukraine. Is that what you just said a few moments ago?
Yes, I did. Yes.
Starting this week's analysis with the SPY, and I currently have the weekly time frame pulled up. It is Friday, so I think analyzing the week instead of the day is going to be a little more beneficial and quicker too. As you can see, the SPY did continue a downtrend today, and I was saying yesterday another red day would prove to be a confirmation of these bearish trends that we've been seeing. And I believe that's the case, that we're going to see a continuation of these bearish trends. These yellow arrows here and here, they're showing these tweezers or a double top or a pipe top, whatever you want to call it. There's like 3 different technical names for this pattern, but essentially what we're describing is the price running up and then hitting resistance twice, failing to break above it, and then the price sinks. And when the price closes below the range of those 2 candles that forms the double top, this is the confirmation, and we've got it on a weekly time frame, which means that the pattern is fairly reliable. I haven't calculated the price target based on the pipe tops, but I do have a double top target of $419, and I think that we could see this level as early as next week. It just depends. It just depends what happens, I think, between Russia and the Ukraine, and if the Fed decides to take any broad and swift action against inflation. So the SPY is looking mighty bearish to me. Let's go ahead and have a look at the Dow Jones here, Industrial Average Index on the weekly time frame as well. And let me zoom over here. So yeah, that's a bearish candle too, right? Here we are breaking below and out of this pattern shown in yellow. So I should probably figure a price target here too. We're going to need to see a drop below this low here at 331 before I am really interested in the price target though. Again, we have a pretty tall wick, which is bearish, and we have the similar topping pattern in the weeks prior. It's just looking so bearish. Everywhere I look, it's bearish. Here we go. Let's type NASDAQ 100 NDX. Let's look at this one. I mean, it's similar. Pipe top, right? Big tall wick. And here I noticed that it's looking like measured move down stuff, right? This was just the first wave down. What the rundown that began at the start of the year was just leg 1, and if leg 2 comes out and plays similarly, we're going to have these drops that are going to bring the price down to early 2021 levels. I mean, that's what I see. It's just the charts are looking really bearish. There's nothing I can do about it. Let's turn on the Russell 2000 here, see what we got. Similarly, big tall wick, huge wick, bearish wicks all over the place, and another double top in here, and there was an uptrend through here that's breaking too. So okay, that's looking pretty bad. Let's go ahead and look at AMC really quickly. Everyone likes to see AMC, and the chart I have pulled up right now, this is where my $7 price target is, and yeah, I still have that up there. Yep, yes I do. You're gonna see an orange 1, 2, and 3. This is the mighty measure move down, the great dippening, and it's been playing out. You can see we've recently hit a corrective trend, and at least on the weekly time frame, we haven't broken that trend yet, although I do see these double tops starting to play out here. We see some some tweezers, as we call them. See the price break out below this $13.40 level would be very bearish, and when it does, then I'm thinking $11 to $7. We'll see what happens. It just depends, because if the markets dive, AMC is not bulletproof. Even though the short interest is super high, that does not mean that the price will go up. In fact, high short interest is typically a bearish indication. Whether or not the short sellers need to close their positions or not is completely unknown. It is pure speculation to claim that the short squeeze is inevitable. And that's not what I'm doing. I don't want to speculate. I want to analyze. I want to take information that I have and use reliable forms of analysis, technical analysis with statistical backing, right? Statistical studies. And I want to use fundamental analysis that is well known and broadly applied for my investing. And I just don't think speculating in a short squeeze is investing. In fact, short squeeze speculation is part of that, quote, wretched excess that Munger was talking about. It epitomizes the top of a market cycle, euphoria, the drunken brawl. So I'm moving away from all of that. I want to find companies that are undervalued, buy their stock, and hold. This is what I'm looking for. Unfortunately, most things in the market are overvalued, I believe, so I'm having a hard time finding those companies to buy. But I think that the incoming bear trend, the bear market, will provide those opportunities for me. So in one way, yes, I am waiting for the markets to drop. But I don't think that is a bad thing. I think the problem is seeing the prices run up to levels that are completely divorced from reality. That's the problem. So, off my soapbox I come. It looks like AMC encountering some resistance at 1890 and taking a big old dive. Let's try on the daily chart and see what this looks like a little more closely. There's a double bottom in here with a potential handle, and that handle is still intact, so a bullish breakout could still occur here. I'm going to turn on my daily drawings. And you're going to see this descending triangle, and the price has failed to pull back into this triangle, which is pretty ominous, to be honest. I'm not really hoping for a bullish breakout anymore. I did think initially that we were going to see some move higher, maybe above this triangle, before rejecting at a level of resistance and then deciding whether or not it wants to go up or down. But I just don't think that this is in the cards anymore, especially with what may be occurring next week, right? There is an uptrend right here, and this is the trend to watch. Should the price break down below this price point at somewhere in the $16 range, I would expect to see the price drop to 14, and if it goes through 14, expect 11 and then 7. That's what I have on AMC. It's not exactly what people want to hear, but that's what my analysis says. And with GameStop, it's similar. Before I go on anything else, I want to just take a peek at Etsy, because I was looking at it earlier this week. The Street posted an article, and they suggested considering short the stock this week. And I said, I don't know, it looks like it could be in a diamond bottom bullish reversal. Well, a diamond bottom, not really, kind of a diamond continuation, and Bulkowski does say that. The diamond bottom can go either way. Really, the thing about consolidation patterns after runs is that they can either serve as reversals or as halfway markers, like a base camp. And that's kind of what we see. This is officially in a vertical run down. So, yeesh, look out below. If the price falls below that 125 level, it could go a lot lower. Volume was pretty high today too. It was just below that 30 period average, but it's looking bearish. So, good job, Street. You called it. I guess maybe I shouldn't just ignore all those articles. 3 top stocks that analysts say to buy. I mean, yeah, that's possible that those stocks could do well and those analysts are right, so I should be paying more attention to those. I'll have to do some more experimenting here with that. How about Facebook? Let's talk about Facebook. Biden did make some remarks today saying that Russia's attempts to divide us abroad and at home had failed.
Despite Russia's efforts to divide us at home and abroad, I can affirm that has not happened.
I thought, at home? Russia's attempts to divide us at home have failed? How would Russia do that? And I'm thinking, well, what makes the most sense would be a propaganda campaign through the media. And how would that happen? I point the finger at Facebook. I don't have any evidence, and it's all speculation. But this is an activist position for me. This is not me investing. This is me saying, hey, Facebook, I have a bone to pick with you. You should go watch my video from yesterday and go to the very end, the last like 30 seconds, and just listen to what Hogan has to say. She was the Facebook whistleblower, and I think that I think that when the dust settles around the investigations around Trump and the insurrection, that I think Facebook's going to be a little more implicated than we originally anticipated. So we did see a low $205. My long put is doing great. I'm holding a long put on Facebook, full disclosure there. This is not a company I want to see succeed. I want society to free itself from social media. You don't need Facebook. I deleted my Facebook and my Instagram, and it's been great. I gotta tell you, it's amazing how little I needed those platforms. And even my cell phone, I've been trying to get my cell phone off my person more because I really don't need it. Okay, so we've covered the indexes of the equities markets and Etsy and Facebook, AMC, but I haven't talked about gold yet, and I do want to do that. Let's go ahead and pull up GLD. This is an ETF that tracks the performance of gold. Today was a green day, and it is within yesterday's trading range. This is called an inside day. It's typically pretty bullish. It's showing a consolidation. To see the price make this big gap up, this is I can't remember what you call this candle, but it's super bullish. And to see that massive gap is just a confirmation of that. And to see this gap zone provide support here is also very, very bullish. It's just like a bullish thing, bullish thing, bullish thing, bullish thing, bullish thing, bullish thing, number 16,000 or whatever. Like, and volume was pretty good too. Volume's red, of course, you can see that because the price did gap down, but it did close higher. So it's kind of a mixed day, really, just consolidation. If I were to zoom in a little bit, it gets confusing because of that gap zone. It's almost like the price moved higher and then someone just cut that little part of the chart out and pasted it down here. I thought that was kind of interesting, but this does look good to me. Looks bullish to me. If I had to guess, I would say Monday morning equities go down and gold goes up. If I had to guess. I want to take a peek at gold futures too. I've got a massive chart pattern there on the weekly time frame that I want to just continue to follow. I want everyone to see it because I think this could be a huge move in gold that is coming. I believe that we may even see the price of gold double or triple in the next 3 to 5 years. There's a big descending triangle here, you can see it in blue, and all these touch points, and this has just been the longest consolidation period ever. And look at what's happening. 1, 2, 3. That looks good. We have bullish meeting lines on the weekly time frame. 1, 2, and 3. This is looking very strong, and you can see that the volume is in an uptrend as well. 3 consecutive weeks of increasing volume, and now the volume is above that 30-week average. It's looking strong, looking very strong. I'm gonna go ahead and zoom all the way out and we'll just get a glance at what the overall chart pattern is for the last, like, I don't know. It's just, I think it's like 10 years. Look at this massive rounding bottom or cup and handle, whatever you want to call it. Just looks bullish to me. So most of my portfolio is in gold. I think that covers the basis for me. I just want to close with some thoughts about nothing. I'm just going to sign off. Happy trading.